This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Douglas Borthwick. Douglas is the Chief Marketing and Business Development Officer at INX. INX was founded by a team of financial market, crypto asset and technology experts, and they're building a regulated cryptocurrency, security token and derivatives trading platform. And INX are currently holding an IPO. What's interesting about this is that it is the world's first fully regulated STO-based IPO. So there's lots to talk about today. Welcome to the show, Douglas.
Andy, thank you very much for having me.
Hey, it is a pleasure. Now, as I said, Douglas, there's a lot going on here, lots to talk about. So to begin with, let's get some background on yourself. I can see that you've had a long and storied career in finance. You've had various roles with Morgan Stanley. You've managed foreign exchange derivatives trading groups in New York and London, and you ran the strategic trading desk at Merrill Lynch. Do you want to just, begin with, introduce yourself and feel free to perhaps reflect on any highlights from your journey so far?
Certainly. Thank you very much. And thanks for having me. I'm originally from Scotland. Came over to this country, to America, when I was 16. Went to undergrad at Carnegie Mellon. Then spent 2 years at Lehman Brothers doing economics research, doing US economics and Latin American. Went to business school then at Yale. Graduated and went straight to the Morgan Stanley training program. I was the first person in the fixed income to come out of a business school. Went right on the trading desk as a trader on the currency desk and traded spot foreign exchange. Really starting with Asian currencies during the Asian crisis. That was very exciting. And then moving on to FX forwards and non-deliverable forwards, working in New York, London, Hong Kong, Tokyo. Came back and moved over to Merrill Lynch, where I ran strategic trading. Then after that, going on to Standard Chartered. They're running the Latin American book. And then left to do a CTA, and which then morphed into actually me joining a company called Pharos that was doing agency FX for equity hedge funds. And then moved to TPI-Cap to build up the Chapter Lane FX trading business, which was an e-commerce business for folks to trade FX. And while I was there, I was sort of thinking about, crypto is very exciting, blockchain is very, very interesting, but the ICO craze of 2017 seemed to be a great way to raise money, but not a great way to give money if you were an investor. It was sort of, people write a white paper, then they ask people to give them money. There were really no handcuffs holding folks together, no regulation whatsoever. And we know what happened in the ICO craze, things fell apart. And I was sort of, kicking around tires and looking for folks who were of a similar nature. And I ran into Shai Datika in Tel Aviv. And Shai was getting a band together of folks because he had a vision, and that vision was, look, it makes sense to have a cryptocurrency trading business. It's going to be the future, but the real future is in security tokens or equities moving to the digital space, fixed income moving to the digital space, and currencies moving digital as well. And this is obviously way before. This was about 3 years ago he'd had this vision, and it knocked on the doors of the SEC really around the same time as Binance went live. Binance went live, about 2.5 years ago, and started an ICO, raised $15 million. I think the market cap of that today is around $3 billion. And Shai, instead of starting up this business, he said, let me talk to the SEC because I'd like to take this company public, raise the money from the public, and really kind of create something new, which is really an STO that's regulated. And the regulation part, I think, is very important because what an SEC or being regulated with the SEC or registered with the SEC, what it means is that you can see for the first time every single aspect of a company, our company specifically, everything about the insiders, what their token holdings are, what their equity holdings are, the compensation plans. But on top of that, you also get the business plan, how it's going to be laid out. And by law, we have to follow this business plan. And so it's a very, very different type of offering. It means that, we can actually go for the first time and ask, people for money that are actually, general public as opposed to just accredited investors. Before us, any security token that came out maybe had 1,000 investors. They were all accredited investors. And that meant when it came to the trading of these, there's only maybe 1,000 people's eyes on them. And what our view was, look, if security tokens are going to be big, they really have to be accessed by anybody, not just accredited investors. And so because that security didn't exist, we had to essentially create it ourselves. And that's what the last 2.5 years have been. It's been, working with the SEC to create something that before didn't exist. Now it does. We're kind of putting our money where our mouths are by doing our money raise for this, using this platform. And it's very different. I think that traditionally, before we came out with something like this, if someone wanted to raise money, they'd go to a VC or a private equity and they'd say, we want to raise money. It was Series A, Series B, Series C rounds, multiple rounds. At which point in time, maybe the founders weren't necessarily in control, but certainly the vision had been diluted in many, many ways. And then when it came to the IPO and the general public could get invested, the multiples were many, many times greater than when the company originally started. And so what we created was a token that, as opposed to giving equity in the firm, it actually says, if you own this token, there's two different things. So there's the utility side, where the utility side is you get 10% off of your trading fees. Now that's modeled after many other firms that have that with their security token. But also on the security side, what we have is 40% of all net cash flows going out to the security token holders as well. So the security token holders have upside in the company should the company perform well. And if the company performs poorly, they don't have that downside because that cash flow isn't taken from them necessarily. But also, we're doing a raise, as you discussed. It's 130 million tokens priced at 90 cents. And we're raising $117 million. And that may sound like a lot of money, but you have to keep in mind that 117 is split really into two different buckets. One bucket, $70 million, is what we call a cash fund. And if you're an exchange and you're trading with institutions, you need to have a sizable cash fund sitting there. Every exchange has it. As opposed to raising $10 million and then getting an insurance an insurance policy to cover things, we decided to build the cash fund. So the other $47 million we're raising, that's really the capital we're using to build out marketing, to build out customer support, and to go out there and get licenses around the world as they're needed. We're raising money to build two things. Now the technology's already been built, so we already have the technology there for the crypto trading business. We already have the technology there for the security token business. What we need to do now is actually turn it on.
That's exactly right, Douglas. And look, you've covered off a lot of ground there. So I think we should just rewind slightly and perhaps go through some of these points one thing at a time, just so the listeners can really understand what you guys are building. So if we just start from a high level then. So what you're doing is you're building a fully licensed and regulated crypto asset, security token, and derivatives trading platform. That's what INX is. I guess the key point here is that it's fully regulated and security token. So yeah, what is INX?
Well, INX is, as you discussed, it's a company that was set up to build essentially three trading platforms, but two trading platforms I think are the important ones to discuss right now. And the reason that these are separate platforms is it's separate regulators that look after each. So the first one, right, if you want to trade cryptocurrencies in the United States, you need what are called money transmitter licenses. Now, currently, we could trade with around 25% of the US, but we'd like to trade with more, and so we need to get more security token licenses. To do that, you need money, and obviously, that's why we're coming to the market. Now, for the security token business, that one isn't managed by the states and the money transmitter licenses. Instead, that's run by the SEC and FINRA, and so there you need to have a broker-dealer and an ATS, or alternative trading system license. So different licenses, different regulators, but all under the same umbrella. And I think that our view is if we can have security tokens that are available to the retail individual, the general public, then the folks that are trading crypto right now can then hit a tab and then they can start trading security tokens as well. Because security tokens will never gain great momentum in the United States or I think elsewhere if the only people that can trade them are accredited investors.
You said before that your platform is essentially it's already built, it's been developed, you've been working on this for some time, and I believe that's essentially ready to deploy now. So you'll start off with a limited number of crypto assets and then security tokens and derivatives, and that's essentially the trading offering, and of course that's for accredited investors and the wider public as well, is the idea, right?
It's not for accredited investors, it's for absolutely everybody. That's what we're building. We're building a platform for everyone. And this could never have been done before. You know, security tokens before we came along could only be traded by accredited investors, or they had lockup periods of a year, 2 years. And what we're creating is something where folks can trade it right now.
Exactly right. It's the democratization of security token trading, which is fantastic.
Absolutely. Well, I mean, it's the only way. You know, if Nike could only be traded by accredited investors, there probably wouldn't be that much volume in Nike.
100%.
And so that's what we're looking at. It's if you really want something to be taken in by the mainstream, and this should be I think this is an important point because, you know, crypto, I think everyone in crypto always talks about how they want the mainstream to get more involved in crypto because, you know, obviously the prices would go up in crypto. But the nature is folks won't get more involved in it until the regulations allow them to be in the United States. And this is really a step towards that. It's a step towards the democratization of crypto and for folks to get involved in it. Now, that means like certain changes. You know, our security token that we're offering, it also has, you know, attached to it a smart contract, and that smart contract enables KYC AML. And this is revolutionary because, you know, in the United States, if you have Nike stock and your grandmother wants it, you can hand the Nike stock to her and everything's fine. But with the security token, the INX one, and I think all others going forward, you can only sell to someone that's already on the whitelist.
Yes.
And so it means that, you know, bad actors can't get involved in this. And I think that probably gets, you know, some corners of the crypto community up in arms because, you know, they want things to go mainstream, but at the same time, they don't want handcuffs. But and that's, you know, maybe 0.2% of the population. But if you talk to the other 80% of the population that are involved in securities, for them, this is a tremendous thing. In fact, I think it was the Fed the other day that talked about how KYC, AML, and securities is something that's very, very important. And I think we can already see that governments are talking about having e-cash. So you'd have, you know, the e-yen or the e-dollar. And certainly China's talking about it as well. You know, and the reasons for that are very clear. It's because, you know, governments want to know where things are going, and you can't do that with the way that the currencies are set up right now.
Yes, indeed. Well, look, let's talk about the initial public offering, the IPO that is underway at the moment. I believe you initially filed your statement with the SEC back at the beginning of 2018, and then last month in August, it was announced that the SEC had declared this as effective, or you know, signed it off for approval. So a couple of questions here, I guess. You know, what's the background to the IPO? Why did you decide to do the IPO? And just talk us through some of the process, that the regulations and the approval process there, and yeah, what are the funds being used for?
It's not an approval process. It means that, you know, that essentially the SEC has run out of questions.
Right.
And so then you ask to be declared effective, and the SEC says, "Yep, that's fine. You're effective."
Yes.
So that's kind of, you know, how it works. Now, 2 years ago, it would have been great if we could have IPO'd back 2 years ago, but a lot of the things that were needed and a lot of the questions that needed to be answered couldn't be answered, maybe because technology wasn't there,
right,
or maybe there was education needed on both sides of the aisle. So regulators are very, very smart, very intelligent, but you know, security token, the aspect of it, ICOs at the time were stinging them, and then they really had to get a very strong grasp of what a security token is. And I think a lot of the last 2.5 years have been a back and forth conversation regarding what a security token is, regarding AML, KYC, you know, what smart contracts are, how they can be used to keep AML, KYC and make it important. And the reason we wanted to do an IPO or an ICO like in this manner is because transparency, we believe, is important in this space. And I think that there's plenty of issues that are out there right now with very little transparency, with folks running through the door to get invested in them without actually knowing maybe who the main actors are, who the management are, you know, and we wanted to, you know, essentially give people that open door to seeing what exactly is needed to do this. And that open door, there's over 200 pages in our F1 prospectus that discuss every aspect of our company, all of the people involved. And when you think about, who's involved, I think that, these days the press goes towards the advisors that we have. But the reality is, we've also got guys like Tom Lewis, who was CEO of Ameritrade, Nick Thedaney, that was the CEO of the Toronto Stock Exchange. These folks know how to build businesses quickly and how to move them forward, and they're independent directors. And we made sure that our board of directors is majority independent. So we wanted to really cross every T, dot every I, and make sure that folks saw that every single aspect of us was declared and sitting out there so that no one could turn around and say, I didn't know that. And the way that you do that is you do an IPO, and you do it by having the SEC register it, or registering with the SEC.
Yes, indeed. And look, you're exactly right. There's a wealth of talent on your team and on the board, and you mentioned the advisors, and there's some interesting characters on your advisory board as well, and I want to touch on that later in the podcast, so we'll come back to that. Well, let's just finish off on the IPO then. So where is it at the moment? When did it launch? When does it close? And what sort of interest are you seeing? And can people still get involved if they wish? Can they still check it out now?
Well, we're obviously restricted by the SEC in what we can discuss regarding the offering. Okay. But certainly we opened it last Tuesday. It's a soft open. We haven't started any marketing at all. And it probably will last, for quite a little bit of time. And that's because the way we're doing it, we're under the SEC's rules, and we're under rules of the securities industry as opposed to the no rules of the crypto industry. Yes. And so on that, when you get effective with the SEC, you're declared effective there. You then have to go to every single state and have them grant you a permit to sell to their residents. And they'll tell you that you can sell to accredited investors or retail investors in their states, and that's a much more lengthy process than it is coming from the SEC. So that's one thing. And then the other one is we're doing this ourselves, and we're not doing it through a broker dealer. I mean, when you do it yourselves, you have to follow these blue sky rules and laws, which mean that every single state is treated differently. And so it's not like something where, I think in the old ICOs, there was a big hype build up and everyone's getting excited. You open the doors, everyone floods in, and then you close it down in 3 hours with 7 times oversubscribed. This isn't that type of thing. And it's not like a traditional IPO where you go out there, you get institutions involved, they've already booked, you already have a book that's 2 or 3 times oversubscribed. Then you take the company to market and you say, okay, we're effective. You go on public the next day and you're trading on a national exchange. Now, when you trade on a national exchange, you don't have to deal with blue sky laws. We're not trading on a national exchange because, we went to NASDAQ, we went to the New York Stock Exchange, and they said, we can't take digital securities. Obviously, they can't because we were the first one. So that sort of made sense to us. But if we'd done that way and we'd be able to go that route, we wouldn't deal with blue sky laws. So, when you forge a path, it's very interesting. It's sort of, you find there's lots of barriers in front of you, and we have to find ways around them. And they're not always the most optimal way, but they're the way that makes sense on the regulatory way. And the regulations were really built not for security tokens, but for equities. And so, you get everyone patting you in the back saying, this is fantastic, you've created something incredible. But at the same time, there's a lot of, it's almost like we're swimming upstream in terms of, how we have to get things done and how we move things in certain ways. And so it just takes a little bit of time.
Yes, I'm sure it does. And look, it's quite groundbreaking, really, from one perspective, what you're doing, because you're essentially tokenizing a part of your business, but you're doing it in a way that is, I would describe as aggressively regulated, right? So no one's really done that before. So just to finish off on that side of things, I imagine your compliance team or your regulatory the people that deal with all that must be a significant piece of work to undertake.
Well, certainly, if you look at the F1, you can see that the majority of money that we've spent over the last couple of years hasn't necessarily been in building the platform. It's been in legal fees. So,
yes.
Again, the lawyers have been learning as we move along as well, because this is very new ground for them as well. It's, it's not cheap to be the first.
No. But the first prize is essentially, you can combine the promise and potential of blockchain, but in a fully regulated fashion, and bring security token trading to the mainstream, really.
That's correct. But it also means there's a lot of we have to do a lot of education, because we're educating two sides here. We're educating the crypto community.
Yes.
And they kind of think like we're putting handcuffs on them because of the AML KYC. And then we're educating the securities community. And really, the securities community doesn't think that much about crypto or blockchain. And so, you're sort of knocking on doors and discussing it. And they think, look, maybe this relates to 1% of the population, but not the other 80%. And so it's sort of like, while it's a leap forward for securities, crypto sees it as a step back. And I guess what we're doing is we're bridging the divide between the two and hoping to bring things more mainstream.
Exactly right. This feels like a good place, Douglas, to just understand a little bit more about what security tokens are, and what the potential advantages of being able to trade security tokens are. So, yeah, what's a security token, and what's the kind of the big idea here?
Well, a security token is a token that's linked to a specific asset. Now, that asset doesn't have to be equity like a share. That asset could be a cash flow, and that's what we're doing here. And within that, you can decide how much of your cash flow you want to give up. It's very variable. But at the same time, the security token could be linked to real estate, or it could be linked to art in a fractionalized asset format. Let's say you've got an incredible painting on your wall. It's a Van Gogh. And meanwhile, the house around it is crumbling. So what do? Well, you sell the Van Gogh to a trust. That trust then owns the Van Gogh, but the Van Gogh still is on your wall. So this dead asset now has some sort of value. The trust then securitizes the security tokens in a fractionalized form of that piece of art. And now someone walking on the street can say, look, I own part of a Van Gogh. Now, if a lot of Van Goghs sell at an auction for a much higher price than they had in the past, then you'd expect that security token linked to that asset to go up in price as well. So I guess sort of like, a REIT is set up in the equity market, and that, you own real estate, but you don't actually have it in your pocket. Now, you can do that with art. You can do it with really any asset. You can do it with cash flows. Let's say you're at a law firm, and the healthcare group there says, we're going to walk unless you make sure that, we get the profits that we should get. And so the security token sets up a contract between the law firm and between the partners that said they would leave. And that contract says that all the revenues from now on, or a percentage of the revenues from now on, will go to these lawyers as long as they stay. Maybe now they'll stay, because now they own the cash flow, even though it's a company that isn't public per se. So there are lots of different ways you can slice and dice security tokens. One of the ways I think that most people will understand it is that they're digital assets, and so they're traded 24 hours a day, 7 days a week. For the guy that's an issuer, they're fantastic because now you can list on multiple exchanges without having to go through all the rigmarole you have to with a traditional equity. All you have to do is, call up the digital exchange and have it listed, and it can be listed the next day. So it's a much, much faster process, a much cheaper process than a cross-listing. When it comes to the cap table, the issuer can see immediately at all times, they can freeze, and they can see every single person that holds their security token. And so if there's a dividend to be paid, they can pay into the wallet that the security token is being held in. So let's say at some point we have a dividend to pay out, that 40% to the token holders, then we'll be able to pay it into their balance, in Ether or in dollars, into their account directly to them. And that means we're cutting out lots of middlemen that right now exist for that sort of process. So what a security token does, because you're taking advantage of the blockchain, because you're taking advantage of the efficiencies in the digital space, you're making other products much more efficient. So if a stock then, let's say, wants to trade over the weekend, maybe it can do a security token of its stock that'll trade over the weekend. Good example, I think, would be Overstock. Overstock did a dividend payment, and then also did some tokenization of their own equity, and now that trades on another exchange. And so, if folks want to take risk outside of traditional market hours, going the security token route makes a lot of sense. And millennials today, Schwab did a study that said that 20% of, in the top 5 holdings for millennials in the United States, GBTC or Grayscale Bitcoin Trust is one of the top 5. Now, we have to throw in there that's Barry Silbert's baby, and Alan Silbert obviously is my colleague. But yes, the reality is that these folks, that millennials, they're very in tune with digital, and they're also the Amazon generation. They don't understand why they can't get a package in 2 days. So they're probably going to have some problems as they grow older and as wealth moves to them from one generation to another, with equities that sort of close at 4 o'clock in the afternoon and don't open until 9:30 the next morning. Now I'm a currency fella, and my background has always been trading 24 hours, and it still confounds me that equities are still trading as if we only get a morning newspaper and an evening newspaper when we're reading the news on Twitter all day long.
Yes, Douglas, and look, interesting that you mention millennials, because on the INX LinkedIn, I saw that you've got a really nice video series that talks about this, right? So one of the videos, it talks about how millennials, and I would say, obviously Gen Y as well, because millennials are almost middle-aged, really, the older millennials, but so let's say millennials and below the digital generation. So they are used to instant gratification and a 24/7 technology lifestyle. And, in the video it talks about how their parents, let's say the boomers, are still reading newspapers, and they're trading based on yesterday's information and a 9-to-5 mindset, whereas that's not really the future of capital markets or security tokens, which allow for, liquidity and efficiency and the fractionalization of anything from, a Kanye West sneaker to a particular Tesla car or a piece of art, as you're talking about before. And that's really where we're heading towards, right?
Yeah, I think that's where we're heading towards. It's a way for people to monetize all sorts of different aspects of their lives that traditionally may be seen as dead assets or things that there aren't ways to monetize today. And the video series you're talking about, that's videos 1 and 2 that have been released. It's a series of 5 that are really out there, not to talk about what we're doing at INX, but more to educate folks about what security tokens are and where we see the future moving towards security tokens.
Very much so. Look, there's been a little bit of a debate on crypto Twitter recently about the INX and the IPO, and we talked before about how some of your advisors are quite high-profile crypto people, and some of them have generally been thought of, I guess, as leaning towards the side of Bitcoin, and they've been critical in the past of the ICO phase and I suppose tokens for the sake of tokens. And look, you've touched on this yourself, but have you followed that debate at all?
Well, of course, I've monitored it and seen it. I think that debate is centering not on the company and not on the management team and not on the vision that we have and what we're looking to execute, but rather it's sort of calling out the advisors. Now, these advisors have been phenomenal in terms of, look, I'm not a blockchain guy. I came from the FX space, and Tom Lewis came from the equities space, Nick Thadani from the equities side. So, and Shai Datika was from the FX side, and our CEO. And so we needed, advisors to help us answer certain questions that would come our way or find solutions to doing things. Now, I think that Twitter is sort of like, calling them out today, but the reality is they called them out a year ago and maybe even prior to that, because all of this has been sitting there in the Edgar database at the SEC for years. So it's been no secret that these folks have been working with us, and we're blessed to have had them helping us answer the questions. I think one of the big things that folks were upset about was that they were being compensated in tokens. Now, when we started out as a startup, we had nothing else to give. And so we were, building a security token, creating something new that didn't exist before. We didn't have dollars in our pocket to compensate advisors, so we gave them something that at the time was pretty much worth nothing, much as if you join Apple on day one. You were getting nothing other than what was about to go to the market. And about to go to the market for us wasn't equity, it was tokens. And so the tokens were seen as having liquidity at some point, but 2 years ago, it was an absolute pipe dream. where you'd talk to Ernst & Young, our auditors, and they'd shake their head and saying, this just isn't going to happen. But you know what? We persevered. And that perseverance, got us to this point today. Now, I think that they get a lot of guff, maybe because they're, maximalists on the Bitcoin side, but not every advisor is, but certainly the ones that are getting attention. That's not really something that the firm has much of a comment on, other than we've certainly appreciated the help that they've given us to get to where we are today. And if anything, they should be applauded for being as open as they have been, because I'm sure there are advisors on many, many other ICOs or any other STOs out there that don't get a mention because they don't have quite the transparency that we do.
Yes, and I agree with that, Douglas. And I just for the listeners' reference, I suppose, two of the advisors that I'm thinking of here, one is Mark Yusko, who of course is from Morgan Creek Digital Assets, and Mark is, he's a great guy. He's been on the podcast before. Very, very smart, intelligent guy. And the other one, I guess, is Jameson Lopp, who probably is the one that would fall more into the Bitcoin maximalist camp. But I don't know if you saw Jameson. He wrote a blog post, I don't know, a few days ago or a week ago, and he talked about this. And I guess he said that the main pushback that he was getting was more that INX had been issued as an ERC20 on Ethereum, but I understand that was more just from a practical viewpoint, really.
Oh, I can certainly answer that. Like 2 years ago, there were no rails like the ERC20 on the Bitcoin network, so Liquid
Yes.
wasn't in existence.
Yes.
And if anyone understands the SEC process, it is if you were to change one or two words, you invite 2 to 3 months of further questions.
Yes.
And when you're in a race to come to market, you can't just change something that quickly. And to be honest, a year ago we thought we'd be going to market much, much faster. Maybe a year before that we thought much, much faster. But the process always has more and more questions. And it reached a point where the management would decide, there's only so many changes we can make. Let's go this route. And this route works. Because at that time, the ERC20 token had been used by many, many other institutions. And so it was well known to regulators. So, look, it is what it is. I can't speak to what someone said 2 years ago or a year ago or 6 months ago that's outside of our firm other than in an advisory capacity. What I can say is that they've been tremendously helpful with us.
Fantastic. Well, let's bring it back to the IPO and the potential launch of INX then. So I believe you're aiming to raise, what is it, 117 million?
Yeah, we're aiming to raise $117 million. It's 130 million tokens priced at 90 cents.
Yes.
Now, that 117 million, that's not all working capital or risk capital that we'd be taking on. Actually, 70 million is put into a cash fund that equity holders can't touch. It's the first lien on that actually goes to the token holders. So if the firm was to shut down or we couldn't get crypto trading off the floor, then that would be returned back to the token holders. So that's something to note. So there's 47 million on top of that we would be using to, turn the on switch and get out there and start moving along.
Yes, and we'll just cast your eye forward then, Douglas. So what sort of, can you paint us a picture of what you think the expected timeline would look like towards launch? I know these are moving targets, but go for it.
Well, I can tell you what's in the F1. And in the F1, we say that 6 months after we close the IPO, we'll go live with the cryptocurrency trading. As I've said earlier, if we turned it on today, we could trade with 25% of the United States population, including California. But obviously, we want to trade with more of the U.S. population. We need to get more MT licenses, and that's something that we would do after we close the IPO. On top of that, about 3 months after that, so 9 months after the close of the IPO, we'd expect to start security token trading. Obviously, that would include our own token as well. And this would be the first time that someone could trade crypto and then hit a tab and start trading security tokens. That's, for someone that isn't an accredited investor. So it's, once again, it's democratizing the security token business.
Very much so. Okay, well, just before we finish off, and we'll go to a break, and then we'll come back and finish off with the crypto conversation hot take round. But just before we do that, Douglas, let's just get your closing thoughts. Then I suppose that this is an opportunity just to speak to the wider industry and both crypto investors and the more traditional financial system. What would you say to the wider investment community about what you're doing and why they should be excited by this?
What we're doing is, I think that we're changing things a little bit for founders, in that founders, after we do this, will be able to come to market directly and raise money directly from the public as opposed to just accredited investors. That's one thing. Another one is we're opening the door for regular equities that trade on exchanges like New York Stock Exchange and NASDAQ to tokenize and start trading digitally. And that's another thing that sort of, this paves the way for. And when folks say, well, do you really believe in security tokens? Well, we do. We believe it to such the extent that we're actually issuing on the blockchain our IPO. Now, other institutions that have talked about doing IPOs are doing it in equity form on the equity market. Well, we believe in the blockchain, and that's why we're doing the IPO in the blockchain. It's also the first security that ever has KYC AML. I think that's going to be important going forward. Start looking at your inboxes and looking at governments and what they're talking about, and they'll probably start talking about that. I think that going forward, there's going to be a lot more folks that are discussing about the foundations of exchanges that exist right now. And you're probably, you could say there's hundreds of exchanges out there in the market right now. The question is, were they built on the right foundation? And I think that if someone wasn't built on the right foundation, or raised money in the correct way, or maybe is listing the right type of things, then I think that they will run into the regulators at some point. Our vision has always been, let's stay on the regulator's side and have the regulators in the passenger seat as opposed to in the rear view mirror where we're constantly changing domicile. So I think that, the INX team, now certainly everyone talks about the advisors, but in terms of the management, we are management that have built these things before. We just hired Pax Diamond over from eToro, who built their crypto business. We also have myself. You've got Shai Datika. All of us have built businesses that are streaming price matching engines. And in terms of well, can we really handle growth? Well, we've got guys like Tom Lewis that ran Ameritrade. We understand what it means to have millions of customers and how to manage that. So where we're going out there, we're on a limb right now in that I'd say that the support is back and forth about I can't believe you're doing an ERC20 token as opposed to on the Bitcoin network. And I think that that's the sort of thing that really is concentrating on the dots and the T's as opposed to concentrating on the whole absolute journey that we're looking to take people on.
I think you're exactly right, Douglas, and look, that is very nicely said. Let's go to a very quick break, and then we'll come back and finish off with the crypto conversation hot take round.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
Okay, we're back, and I'm with Douglas Borthwick of INX. Douglas, I like to finish each crypto conversation podcast with a quick round of rapid fire hot takes. Are you up for it?
Okay.
All right, I just want your hot takes, your hot fire. Take your best shot. Here we go. Douglas, where do you sit? We've talked about this a bit. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
Well, to be honest, Andy, I don't sit on that spectrum at all. What I do want, though, is to make crypto more available to the masses.
Hey, look, it makes sense to me. That's what we all want. Okay, well, Douglas, what would you say is your firmest conviction crypto opinion?
Well, my firmest conviction, I'd say, would be that we'll probably see much higher Bitcoin and much higher Ethereum, obviously, as more and more folks get involved in this space, but obviously as it's being used more and more in real-world examples, for example, our IPO.
Hey, can't argue with that. Okay, Douglas, I ask every guest of this question. Who do you think wins the American presidential election 2020?
Well, it's interesting you say that. The Wall Street Journal wrote an article about 2016 because I picked Trump, and Trump ended up winning, and I think that Trump again will win. I think that that the Democrats so far have failed to give a true message of what exactly they stand for. More, they're kind of pointing fingers of what they don't stand for. I think that the Republicans are just going to be doing a better job of talking to folks, and it's certainly riling up their base. And I think that Biden running for president right now, he's not really making himself available for talking to the public or for questions and Q&A. And I think that the public really wants that. So I think that Trump has another chance of winning this presidential election.
Okay, well, we will just have to see. We'll know soon enough. Let's change gears slightly. Bill Gates famously said, Douglas, that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What do you think the blockchain space or the security token space looks like in 10 years' time?
I think in 10 years, you'll find most assets trading on the blockchain. You'll find digitization of all equities. You'll have digitization of fixed income, of commodities, of currencies. All of them will be sitting there on the blockchain. We'll be able to trade them 24/7, and there'll be a heck of a lot more efficiency when it comes down to settlement and other aspects and payments that exist right now. But it's tremendous efficiencies that are coming, and it's all going to be because of the use of the blockchain.
Very nicely said. Okay, well, similarly, Douglas, William Gibson said, the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
For sure. We're doing a IPO in the blockchain. I think that there's 0.2% of the world that's aware of it right now, and that's in crypto Twitter. And I think that the other 80% that trade securities and equities really have no idea. And so I think that they're going to be rather excited when we start the marketing and start letting folks know about what's available and what can be done.
Sounds good to me. All right, time to get weird. Let's zoom out. Douglas, what do you see as the long-term future for the human race? Do you see dystopia or utopia?
I think that the human race right now is a little bit anxious due to COVID. I think that over time, though, everything always gets better. That's what my mother always tells me. So I think utopia.
Fantastic. We're almost done. Let's finish this off. Finally, Douglas, what is your favorite science fiction book, film, show, or universe?
Well, I think it has to be Star Wars.
Easy as that. And actually, just while I've got you, Douglas, you're from Scotland, yeah?
Yeah, that's right. Yeah, from Glasgow.
What's your whiskey of choice?
I think Lafroig or Highland Park.
Oh.
Highland Park would be my first choice.
Yeah, Lafroig is...
Dark, peaty.
Yeah, very nice, very nice. Ardbeg?
I like Ardbeg as well. I like anything that's peaty and dark, and you can smell the peat. And I think that very much reminds me of Days in Sky and Harris and Lewis and the Hebrides. So yeah, that's my favorite.
Yeah, very nice. I love those peaty whiskies myself. All right, well, hey, this has been a lot of fun, Douglas. Thanks for joining me on the podcast today. There's nothing else to say really, except the microphone is yours. Take us out. Tell the people where they can go if they want to find you on your various platforms, or where they should go to find out more about INX and the IPO and what you guys are building.
Well, INX is found at inx.co. You can find me on Twitter at DC Borthwick. And look up INX Limited on YouTube. You can find the educational videos that we're starting to release if you want to learn more about security tokens. And thank you very much for having me, Andy.
Fantastic. Thanks, Douglas. All the best.
All the best. Thank you very much.